Stocks could double their losses. Let me say it again for those in the back. Stocks could double their losses. Jeremy Grantham, a renowned investor and market historian, predicted the 2008 bear market and the burst of the dot-com bubble in 2000. He is back with his crystal ball, and he is saying that the downturn today is worse than the tech bubble of 2000. He is saying that stocks are set to at least double their losses. The tech-heavy NASDAQ composite is sinking deeper into a bear market. In fact, just last week, the Dow Jones Industrial Average posted its biggest loss since 2020. The Dow shed 1,164.52 points, or 3.57%, to 31,490.07, the average's biggest decline since June 2020. It was the lowest close for the Dow since March 2021. In January, Apple hit an all-time high of $182 and is now barely at $140. Microsoft went up to $343 6 months ago. It is now at the $250 level. Meta hit $346, but has now dropped to $192. But there is a bigger lesson to be learned here. The dip was mostly, if not all, due to earnings from Target. Check it out. The big box retailer not only missed earnings expectations, but it also said that margins would continue getting squeezed due to inflation. It was the latter, more than the former, that caused investors to panic, sending the stock down 25%. From there, it was easy to extrapolate Target's problems to the broader market. Bill Kirk, analyst of the premier institutional equity trading, sales, and research firm MKM Partners, said that the problem is that inflation is forcing consumers to spend more on food and less on more profitable discretionary items. The stock market isn't as stable as you think. All it took was one announcement from one company and the whole market went down. Grantham has been warning of extreme speculative activities in the market since the depth of the pandemic. In 2000, the sell-off was concentrated in U.S. stocks, while other assets like bonds, commodities, and housing held up well. At the beginning of 2022, Grantham issued a dire warning, saying the end of bubble extravaganza was coming. He called for stocks to drop 45%. He said the combination of stocks and housing proved quite dangerous. We would have a severe recession. Many investors will take this as a buy opportunity, given that valuations have hit levels not seen in years. However, Grantham preaches caution, highlighting that the estimated profit margins at most companies will deteriorate as an economic recession materializes. He said that the first thing to go in a recession is profit margin. What's even more dire is the potential for Grantham's forecasted recession to morph into something like the 1970s, where economic growth slowed and inflation persisted. Caution, 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 y'all. Do you agree with Grantham? Are you reallocating your portfolio? What asset are you buying into? Let us know in the comment section below. Don't forget to subscribe and hit the notification bell for our updates.